what the wave theory is even talking about. But at least I have a fair idea what market, what the support and resistance, But I didn't know that is a market trading methodology. So you are the teacher. You know which one is best, whether wave theory or the market maker theory. I don't know. Which one is best for you? I'm ready to follow you, sir.
Of course, our lecture today is just an introductory. We are not going to go deeper, but it's just to interact, to know the way forward, how we are going to our learning.
Yes, sir.
Well,
yes, sir.
This wave theory, yes,
sir,
is an advanced methodology. All right.
Okay.
It is used for what? Forecasting. Forecasting.
Okay.
Yes. It's used to forecast the market. How the market is moving, where is it going? All right, where is it going? How is it going to get there? That's what that wave theory is about.
Okay.
It's an advanced methodology. So I just want to hear your opinion. I know I'm not going to teach you wave theory. It's too advanced because I discovered that many people that I have taught before, without their strong and another way of trading, they normally fumble, they fail. Because it's ahead. It's theory. Every movement that you see in the chart, it has an explanation. Every movement you see in the chart, it has an explanation. And that explanation is provided by wave theory. Yeah.
Okay.
Theory, yes. You see? So you will still learn it in future. Or after I have taught you the one I want to teach you, I can assist you by giving you all my trading videos. Because you have paid, so I cannot hide anything from you again. All my training video on wave theory, I can give you course by course, guideline by guideline, so that you too you will learn and you can chat me, ask me questions, not call.
Okay.
Ask me question. How is this one? You said so in your video. How is it? I will chat you and explain to you and explain the details to you. Do you understand?
Okay, sir.
I'm going to be teaching you on market makers trading methodology.
Okay, sir.
That I know you will get easily. Market maker methodology. But before we even go to market maker trading methodology, I will ask you, do you properly understand what is Forex? What do you understand by what is this Forex? What is it all about?
Forex basically is buying and selling of currencies at the same buying and selling of at the same time. You please buy and sell at the same time. It's a very funny market. You're buying and selling at the same time.
Yes. Like look at this man, this GBP USD. Why buy and selling at the same time? You are saying that if you are buying GBP USD, now we are selling GBP USD. This selling you are doing, it means that you are selling GBP.
Yes.
You are selling this GBP, you are automatically saying that the value is less than USD. So automatically you are what buying USD that's at the back. So you are selling this one, you are automatically buying this one. That is a simultaneous buying and selling of currency. At the same time. When you are buying USD card, as we are doing now, this USD, I hope you made money from USD card as I posted last week.
Yes.
You made money from USD card, right?
Yes.
Correct. So this USD card, if you are buying it, it means that you are buying USD, but you are automatically telling us that you are selling what? Card. You are selling what? Card. That's what it means.
Yeah.
Simultaneous buying and selling of currency. Now, one is that with Forex remains forever. Will Forex remain forever, so that you know that the profession you are about to start is whether it's one day or it will remain forever. You need to know what is the lifespan of
whether it's sustainable or not.
Yes. Well, I'm happy to announce to you that in as much as there is international trades, as different countries have their own monetary policy. Okay, they have different policy that concerns their economy. There will always be forex.
Forex.
Yes.
Okay.
If Europeans are going to America to buy one goods or the other, they are not going to spend euro. America will not allow anybody to spend euro in US. You have to spend dollar.
Yes.
And
Yes.
you are in Spain, you have euro. So if you are going to America, you must need dollar in order to operate there. So
Yes, sir.
for you to need this dollar, will you not go and sell your euro to buy dollar?
You will do that.
Thank you. So as you are selling your euro, in order to procure dollar that you will spend in America, you are already participating in foreign exchange. Oh yes. You that is in Nigeria, that you are spending naira. If you want to buy anything, if you want to buy anything in Japan, Japan will not collect your naira in Japan. Japan want your yen.
I need yen.
Yeah,
yes,
for
sir.
you to buy something. So by you going to GTB and use your naira card to buy something in Japan, where they will now exchange it to dollar for you, you are participating in forex.
Forex.
Do you know that almost everybody in the world are doing forex, whether directly or indirectly, and they don't know?
Yeah.
Somebody that say he wants to buy a car in Canada, he's sending money to his brother to help him buy the car in Canada.
Yes, sir.
He has naira, 3 million naira here. He wants to change it to, he went to Aboki, change it to dollar and send it via wire transfer. Has he not participated in forex?
He has.
He has. And when he gets to America, the American man will want him to send money for shipping over there and, and all those things. He will use his card to now send money to his account there. He has participated in forex. Look at somebody in Idumota that is selling clothes. You want to go and buy clothes in China. And for him to go and buy this clothes in China, he has to sell some naira here in order to buy yuan, Japanese yuan. By the time he's buying yuan to sell it to China, he has participated in forex. But the difference is that we, as professional forex traders, we are not doing our way they are doing their own. And the reason why we are not doing our own is because we have a platform that enables us to participate in that exchange together with the CBN of different countries. Do you know that if you change your naira to yen because you want to buy something in Japan, that is doing the settlement, it is the CBN of Nigeria that is doing the settlement with the CBN of Japan through the World Bank.
Okay.
Let me tell you something. Which bank is the banker of government in Nigeria? The bank.
The CBN.
Thank you. So the CBN of Japan too, the Central Bank of Japan too, is the banker of Japan. But there is one bank that is going to settle the two of them. What is the bank?
That should be an international bank now. That should be an international bank.
That's World Bank.
World Bank, yeah, World Bank.
As you have Nigeria Central Bank, you have Japan Central Bank, you have England Central Bank, you have a Reserve Bank of America. You have one bank that settles all of them. And the name of the bank is World Bank. So if you use your naira to exchange for to Great Britain pounds, it is one bank that is going to settle the transaction. That is World Bank. We clear it between Nigeria and England.
Britain.
Yeah.
England, yeah.
Yes. So is that World Bank? So now what they are now saying is that every order that is made between, let's say, don't let us use Nigeria because we don't play in naira in international listing. Let's use Euro USD. Somebody in who is spending euro is doing transaction with somebody in America who is doing US dollar. Now, by the time he exchanged his euro to dollar in order to play in America, one bank is doing the settlement for Europe, for Spain in Europe and United States. And the bank is what? Is the World
Bank.
Correct. So what we are now saying is that when the order to get dollar is very high, many people are buying dollar. And then as many people are buying dollar in Europe, what happened? They will be selling their euro, Abi.
Yes, sir.
That is when you now see that Euro USD will begin to sell. It will begin to sell. Why? Because many people are going to America to do business.
To buy car.
Yes, to buy car, to procure things in fact.
To buy goods.
To buy goods. And they are selling their euro to procure dollar. That is why you now see that Euro USD will be going down, will be going down, will be going down. And then that order you see is placed in interbank. That interbank. And the way the order is placed at interbank, it is what is reflected in the chart that me and you are seeing. We are now capitalizing on the order that people are placing to sell.
Okay.
We are now capitalizing on the order that people are placing to sell euro in order to procure dollar. That's making Euro USD to fall. We are seeing it clearly from the MT4, from this chart. That is why me and you, we are now capitalizing on those moves to also place our small money to say, okay, we want to sell euro too, so that we buy dollar, because all the order have been placed in interbank in order to procure this. So you also want to join them. That is why me and you can participate in Forex today. It was a business that was meant for interbanks to do. Bank of England interacting with Bank of Japan. Bank of Japan interacting with Bank of America in USD JPY. Do you understand? So we are not on those moves to make our money too. So that is the question about Forex. Then you know the pairs, all right? You know the major Euro USD, GBP USD, USD CHF, USD JPY, then USD CAD. These are major currency pairs. You have the minor currency pairs, which are the GBP CHF, all right, GBP CHF, GBP JPY, GBP AUD, all those ones. Then you have the cross pair like Audi CAD, you know, NZD CAD. These are cross pair. AUD, JPY, NZD, JPY. All these ones are cross pair. You know, you read all these things from the manual, right?
Yes.
Okay. These are just the background information. Then you know how to calculate pips.
Yeah, pips is the movement from one point to the other. That's the pips. The changing in there. Let's say move from price 1 to 2, or let's say price 4 to 7. The pip is obviously 3.
Yeah. So from this, you know how to calculate it from the side here, from the price bar here.
Yes, from the price bar. Yes,
you understand those ones. You understand those ones, right?
Yes.
Okay. Yeah. Of your stop loss, you know how to calculate stop loss. If I give you trade and I say 30 pip stop loss, you know how to calculate the point that the 30 pip stop loss will be for buy.
Yes.
You know those ones.
30, if it's 30 pips, it's good. Let's say the price is, let's say the price is, for example, let's say the price is 0.1113. And if it is a buy transaction,
yes,
and you say 30 p stop loss, 30 pips stop loss, that means you minus 30 from the 113.
Yes. Yes.
About 1007 what 3 plus I think 7 5 or so. Then if it's a sell transaction.
Hold on. You say your entry price is 0.1130.
No, let's say, for example, let's say the entry price is 0.111. Let's say 1110. 1110.
Okay.
And for example, just for pose and analysis, and you are, and it's a buy, and it's a buy transaction.
Yes, yes.
It's a buy position you took.
Yes.
And 30 pip stop loss will be 30. Remove 30 from this 113, so it becomes 1070. That's the stop loss. 1070. Sorry. No. Yeah, 108. 1080.
It's okay. You understand.
1080.
You understand it.
Okay.
I've passed that stage now. Then what else?
Okay.
To understand. So if I now give you a trade and I say you should use 30 pip stop loss, and you have $1,000. So if you now want to risk 1% of your account, how are you going to determine the lot size that you use? Lot size.
You have 1,000 on your account, right?
Yes.
1,000 on your account. And you want to risk how many percent?
1% of your account.
That is a $10, right?
That's $10, yes. And you just stop loss.
Okay. Of course, you have to use this color. You have to use the smallest lot size now. The mini, it's a micro, 0.0, whatever. The smallest lot size you use now.
Okay. That's 0.01.
Yeah, use micro, yes.
So if you now use 0.01 times 30 pips, what is the dollar value?
0.01
times 30
times what?
30 pips.
Times 30 pips. That will give you 0. Move it to two places. That will give you 0.003 now. 0.03. That will be the dollar value.
This is how you calculate the dollar value. 0.01 times 30. You now multiply it by 10.
0.01 or 0.001.
No, there's nothing like 0.001. The least is 0.01.
Okay. Sorry, I use 00. Okay,
so times 30, you now multiply it by 10, and the answer is $3. This $3 is equal to $10 that you want to risk. Is it equal to?
Pardon, you say what?
This $3 we got by using 0.01. Is it equal to $10?
Is equal to what?
Is it equal to this $10 that you want to risk?
No. It's
so
not.
you can now see that. You can now see that your 0.01 is wrong. So you just So you don't guess it. Don't guess it. All these ones, you use what is called a position size calculator. Have you heard it before?
I have an idea what it means, but I've not read it.
Yes, you have heard of position size calculator before.
Yes.
Position size calculator. That's what you use to do. Now let me take position size calculator. All right. Let me go take you to position. You go to Google. Are you seeing my Google that I'm typing?
Okay.
You are seeing my Google, have you?
Yeah, I'm seeing your Google, yes.
So you now type in position, write it down, position size calculator, because you are going to practice that one this week. So position size calculator. Right? So you now you see position size calculator by my FX book. Click that one.
Okay.
The first one, click that one. Position size calculator, my FX book. Click that one. You see what it will bring out now. Are you getting it? You can see that I'm not interested in just carrying you to the chart. I'm beginning to teach you. What can make you to succeed is what I'm telling you now. Early enough, risk management is what we are doing now. Are you?
Okay. Yeah, I'm with you.
I'm not carrying you to the chart and say this support, this resistance, this how to pick trade. That's not the most important thing. This is those that taught us early enough. They started teaching us technical analysis, and we failed woefully from the beginning. Yes. They ignore.
You lost a lot of money.
Yes. This one is laughing. It's not funny. They ignore all these things I'm doing for you. They ignore it. Trade management, risk management, they ignore it, and they started teaching us BB grammar, support resistance, Fibonacci, all those things, and we fail. We fail woefully because we cannot apply risk management. Okay, now look at it.
Yeah.
We are now in position size calculator, all right? So what do you do?
Sir.
They say currency, just leave it on USD. They say account size.
Yes.
What's the account size we choose?
0.01.
Account size, your money.
Okay, 1,000.
Correct, 1,000. What is the risk you want to take?
30 pips.
What is the risk? The risk in percentage. Don't make mistake. Risk in percentage.
1%.
Don't make mistake. Okay. And size, the money you have.
Yeah.
Risk in percentage.
Yeah.
1%. What is plus value?
It's 30 pips.
30 pips.
30.
Let's assume it's Euro USD. How many position? 1. You see calculate here?
Yes.
Click it. What is the lot size that is giving you here?
It has given you 0.033.
Correct. That is the lot size you are going to use for this trade.
Okay.
That's the lot size. So now let's go and do it. If you now say, go and use your calculator and say 0.033 times 30 pips. I told you say times 10 Abi to get the dollar value. Now what is the answer?
Yeah.
What is the answer?
I'm coming. That will give me just a minute. 0.033 times 30 times 10. It gives me 9.9. 9.9.
Can you see approximately 10? Can you see that it is now equal to the 1% that you want to risk before?
Yeah.
Can you now see it? So
yes, I can see.
If you like me, I don't need position size calculator. I calculate everything I need from my head. I'm used to it. But
okay.
At the initial point, I was using position size calculator. But as time goes on, I became used to trading that I don't need position size calculator again. So you can start using position calculator, fixing your equity, the amount you have, fixing your percentage risk, fixing your stop loss value, fixing your currency. Press calculate. As soon as you do that, my brother, just go and check the lot size here. Check the lot size here. What is it giving you? That's what you are going to, the lot size you are going to use. And
okay.
Yeah, if you lose the trade, you lose 1% of your account. Somebody that have $1,000, if you lose one trade and he loses $10, is it going to affect the account?
No.
Let's even assume he loses 5 trades in a row. If you lose 5 trades in a row, he will lose 5% of the account. That is $50. But he can win one. He can win one, all right, and get $100.
Yes.
So he will still be. This information nobody told us from the beginning. Nobody told us from the beginning, and we failed. So that's what I'm telling you now. That's what I'm telling you now. Today is the beginning of your course. I'm not teaching you technical analysis. I'm not even. You see you any chart? I'm not showing you any chart because that's not what you succeed. Though. What you need to succeed. I'm telling you, go back and learn it.
Okay.
Teach on how to maintain 1% risk in your account, so that even if you have 10 trades in losses, at the end of those 10, you have only lost 10% of your account. And your account is not, you only reduce, it's not injured. But if you don't apply, somebody will want to place one trade, you go and use 5% of his account, he loses it. You go and use another one, 5% of his account, he loses it. He said, no, I must get it back. You go and risk 10% of his account, he will lose it. Only 3 trades, he has lost 20% of his account. That's So the mistake we made from the beginning that made us to fail, I'm now telling you those loopholes so that you will correct yourself and not follow the footstep of failure that we had in the beginning. That is the truth. So please, I think we are We have done something on risk management now.
Yes, sir.
Now, my own, before, I used to have 70 pips stop loss, 100 pips stop loss, and as this stop loss is increasing, I wouldn't want to, use small loss, so that because my focus will always be on the profit. My focus will always be on the profit, and I will not focus on the loss, possible loss. But Castle,
yeah.
Do you understand now? So now,
I'm understanding.
when I discover that I always use a higher number of pips as my stop loss, picking my 4 and 1 hour, and when I lose, I will lose big in my account. I say no. I have to redefine my guidelines and my methodology in such a way that I will keep my strategy will permit me to take a trade that has only 30 pips stop loss. So that by the time I get percent of my account for it, 30 pips stop loss, if I lose it, it has no significance at all on my account.
Okay.
Even if I lose 3 in a row, only 3% of my account has nothing to do with my account. My account is still alive. But
yeah.
If I catch one, I catch it well. It can clear all the 3% I have lost and give me extra 4%.
Yeah.
So that is why.
So what that means that the challenge is, I noticed that when the lot size is very small,
yes,
it takes for you to make even just $1, the peak will be very, very high.
Yes.
That's what I noticed. And the movement may not move as fast as that. Sometimes when you put it, you will not even see it on your the take profit so far.
Yes.
So I guess, will you even reach there at all? Will you ever reach that to take profit?
So what you do is to learn from the beginning to use this position size calculator to make sure that you don't risk more than 1% of your account per trade. So when you use it and it's giving you a smaller lot, somebody that is having $1,000 account, you will say he's going to use 0.1.
Yeah.
What if the stop loss is 50 pips? It means that when he loses this trade, he's going to lose $50. If he loses like that times, he has lost $250. That's to failure. So it's not a must that if you have $1,000, you must use 0.1. Use position size calculator. Keep your risk to 0.03 with this one. If you do it like that, my brother, let me tell you one story. I share this story with my wife sometime. And what is the story? I have 2 taps in my house. 2 of those taps leak by dropping water. Just a drop. So what we do is that when we want to sleep, we put bucket under because we don't have chance. As a trader, I don't have time to call a plumber, come and do this thing. So when we have time, we'll do it. My wife is a very busy, very hardworking and busy woman. Doesn't have time. I say, okay, we'll put bucket under. But do you know what I notice? When we sleep, I'll put this tone.
We'll put the bucket.
When we wake up, the water will fill the bucket.
I overflow.
Yes. And the other one is a basin. When we wake up in the morning, the water will fill the bucket. I say, God, it's like you are telling me a story here in my house. So what is the meaning of this? I now relate it to Forex. Do you know that if you are right and you are consistent with your strategy and with your profit, if you have $1,000 account, sir, and you are using 30 pips stop loss, and you are using 0.03, do you know that in 1 month, this account can become $2,000?
Yes, that's correct.
The day at some trade, you had $30, some you had 20, some you had 5, some you had 2. All you require is consistency. Are you consistent in your result? Once you are, the way that water is dropping, you know, it's not stopping.
It's not stopping yet.
It's not stopping. It's dropping there, dropping there, dropping there, dropping there. Is it not consistent?
Consistent.
Yeah, if you are consistent and you are getting your profit in piecemeal, you are biting it. When you lose, just lose small. Bite it. In a month, your account will double. That is the great lesson and I learned. And you are the first person I'm sharing this lesson with.
Thank you very much, sir.
Yes, I'm sharing it with you. It's a great lesson. So risk management is very, very important. So
yeah.
Let's talk more about trade management. So now, want to, if you like, okay, even if you don't write it down, I'm recording it for you. This recording, I'm doing
okay.
I'll send it.
Okay. Thank you very much. Thank you.
If you are trading, right? If you are trading,
yes, sir.
Now I have told you that I would like you to emulate. It's not compulsory, but I would like you to emulate my trading style. Since I'm mentoring you.
Okay, sir.
What you paid for is not
sir.
to teach you Forex. So that
yeah.
I want to prepare your mind so that you don't say I'm not, some week I may not even hold webinar with you, but I will share an idea with you. What I'm preparing for you is mentorship. I want to mentor you to be able to trade well. So the hard work, every hard work that is required should come from you. It should come, but I want to show you the way. Any secrets in the market, I will show you. I want you to go and implement it and follow me as I'm trading. I add you to my group free of charge because you have paid me to learn. So the money you have paid is not expiring forever.
Okay, sir. Thank you very much.
It's not because forever and ever, anything you don't know, you have right to now call me and ask me. There is nothing like the money has expired. No. That is why I charge full $500 because I know that you can never finish learning Forex. So as long as you can never finish learning Forex, you always be coming to me that, well, how is this one? How is this one? And then I will have to put my time down and explain things to you. So this thing I'm teaching you, I'll be holding webinar with you. At times a week, I may not hold webinar with you. But be following me in the group. Anything you don't understand, be asking me. Then I'll be throwing some videos to you to watch and see what is inside and give you assignment. Whatever you learn there, do it and send it to me. I think you know how to use TradingView.
TradingView is a chatting software, right?
Do you have an account there?
No, I don't have an account. What are you?
You have to use TradingView. You can't
okay.
Your MT4 to send chat to me. I will not even look at it. I won't look at it. Look at this one. Look at this one. You see Euro USD and GBP USD.
Yes, I can see it. Yes.
You see how this chart look like?
Yes.
Does it look like your MT4? Can see it. Anything you want to do is easier here. It's easier here. Can you see? Can you do this on MT4? Can you see?
No, I cannot. I can't even. I'm even struggling to. No, I've not used this. I can't move around in the MT4.
Can you see this? Can you see this?
Yeah.
Anything you want to do here is easy. This is more or less like architect using a software to draw, and some architect in the video using their hand to draw. The difference is very clear. And if you want to play,
are they brokers?
They are not brokers.
Okay.
Chatting stuff. Just
okay.
Chat analysis. Can you see? I've cleared everything now. Very easy.
Okay.
So maybe one day we'll sit down, I will open your TradingView account, and then I will teach you how to use it. All right?
Okay, no problem, sir. No problem. I've noted it, sir.
So now that's that. So we need to touch more on what is called trade management. Now, trade management. Number one, You have used 30 pips stop loss, have you?
Yes, sir.
Number 2, as soon as your trade move 20 pips in profit,
Yes.
what do? 3.
Take profit.
No, move stop loss. You move stop loss to entry. Write it down. That is trade management.
Move stop loss
To entry. Right? Number 1, risking 30.
Hold on. Let me ask you.
Okay.
Can that be done when you have already taken a position? Once you do, can you move your stop loss after you take a position?
Yes. When the trade is running and you are in 30,
yes,
you are 20 pips in profit. What you do is that
yes,
you click the trade, you now click modify.
Yes.
You click modify. When you click modify, the stop loss that you put there before, you clear it.
Yes.
Clear it. Clear it. Then the entry point, if maybe you enter at
yes.
0.0510 and you are buying,
Yes, sir.
and you have
Yes, sir.
1.0530, you have gained 20 pips, Abi, and your
yes.
loss is 30 pips, which is 1 point stop loss here, 1.0480, Abi?
Yes. Yes.
Stop loss. So immediately you
Yes.
have from here to here, you have gotten 20 pips, Abi. So
yes, sir.
These 20 pips, what you now do is that you now go and click modify on that trade. You clear this one,
Yes.
clear it off. And this
yes.
is now entry point. You now replace this stop loss, put it here. You now put 1.0510 here.
Yes.
Do you see it now?
Yes, I'm seeing it.
The implication of what you are doing is that you are saying that your stop loss is no longer here, but it's here.
Okay.
And the reason why we have to do that is that it is an abomination. Write it down. 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 It is an abomination for me. Write it down as I'm saying it. It's a quote. It is an abomination for me to lose a trade that I am already in profit by 20 pips. It is an abomination for me to lose a trade that I'm already in profit by 30 pips, by 20 pips. Have you finished writing it now?
Yes, sir.
So now, if you now move your stop loss to 1.0510, what does it mean? It means that if this market should come back, where is it going to hit you out?
1.0510.
Which is your entry?
Yes.
Have you lost anything?
No.
This is a concept called what? Break even.
Break even.
Yes. This is a concept called break even. Break even is a situation where you lose nothing. You gain nothing and you lose nothing in a trade. When you do a business and you neither gain nor lose, you are even. Yes. You didn't lose anything, you didn't gain anything, you are at break even. And in most cases, when you are at break even, you are just like you are stepping.
Your money is contant.
Yeah, your money is intact. You are not looking for.
It's only your time. It's only your time you are wasted.
Exactly. So that's number 3. Number 4. You know, you have secured your capital now. What you are looking for now is when you now move from 20 pips you have gained, you have moved to what? 50 pips in profit. 50 pips in profit. Right? What you now do is that you now secure 30 pips profit. What do I mean by secure 30 pips profit? Look at it. Entry 1.0510, stop loss 1.0480. You were in 1.0530 before. You got 30 pips. You now clear this stop loss and make this place to be stop loss, right?
Yes.
But now,
yes.
1.05 0.550. So
Yeah.
0.560. Now
50, yeah.
gain 50 pips. So since you have gained 50 pips, what do? This stop loss, you move it from here and move it here. Stop loss will now be here.
Okay.
So if you move stop here, you have secured 20 pips profit. Secure 20 pips profit.
Okay. Yes, sir.
Now, even if this market should come here, it's not going to hit you as break even again. It's going to hit you profit. It will hit you if you see come down. It will hit you into profit by 20 pips. So as this market is going up, you will be increasing this stop. You'll be moving
stop loss.
Yes, you'll be clearing the stop loss and you'll be increasing the value into profit. As this you'll be moving your stop loss, clearing it, and moving a higher value. It will, by the time you move stop loss to here, which is 1.0560, you have gained 50 pips already. Maybe the market is at 1.0580. You are now leaving 30 pips of your profit to play for the market to move up and down. But the 50 pips, you have already secured it. All right, can you see? When the market move up again to 1.0600, the market has moved 90 pips. How many pips? 90 pips. You now move the stop loss again, move it into profit again. You can now move it to 1.0580. You have secured 70 pips. So if this market should be down, it will take you out in profit by 70 or 80 pips. Can you see? So the process of moving or adjusting the stop loss into profit as the market is moving in your direction is what is called trailing what?
Trailing loss, I mean.
Trailing stop. You are
trailing stop, okay.
Yes.
Trailing stop, okay.
Yes, you are trailing your profit. You are trailing your stop your profit.
Okay, so I thought that trailing stop is something you do automatically. So you do manually, something you do manually.
Yeah, you can do it with your MT4, but in a situation where you cannot do it with your MT4, clean it off manually and put the value that you like there. Okay.
Okay.
Value that you like there.
And when you do it, it will not close that trade against you.
If the market move down, if the market jack down, it will hit you out where you place it in the last place that you put. It will hit you out.
What I mean, when you modify,
yes.
When you modify, the system will not accept it as if you have closed that trade. You only just modify.
No, you only modified it. You did not close.
Okay. Are you serious?
Yes,
that's interesting. You can modify as many times as you have the opportunity.
As many times as possible, in as much as you are in your.
Okay, I'm not going to your favor. Okay.
That is essential part of trade management. And if you put 30 stop loss, never, if the market is going against you, even if you know that by the time this market gets to 35 pips stop loss, it might now go to your direction. Never shift your stop loss. What did I tell you?
Never shift your stop loss.
If you shift your stop loss, it is an antidote to failure. It is an antidote to failure. If you say the stop loss you are using is 30 pips, based on the structure and based on your strategy, 30 pips must remain a 30 pips. I gave a trade on Euro CHF. Unfortunately, as soon as I gave the trade, Euro became very weak. We wanted to buy it. Euro became very weak. And I maintained 30 pips stop loss and I told everybody in the group, as this trade was going against us and almost hitting stop loss, I have a very good friend in the group who adjusted his stop loss. He adjusted it to like increase it to maybe 35 or 40. And he told me, I said, oh boy, this thing that you have adjusted, what if the trade continue to go down, then you'll be losing more. Are you risking 1% again? No. And what happened? If you go and check the CHF, it went down. And the guy sent me a message that, oh, Mr. Nan, you said it to Euro CHF. You said it that this market, what if you continue to go down, 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 down? Can you see? Euro CHF, we expected it to bounce. We expected it to bounce from here to the upside. We expected it to bounce to make this ABC correction to come here. So we bought Euro CHF here. Unfortunately, it broke down. Okay? All of us were out at this level. But my friend was out at this level in a big loss. He was expecting to bounce, expecting to bounce. This is how you expect this market to bounce. This market will come down here, and you hear that the account is blown. So, the essential part of trade management strategy, never move your stop loss. Anywhere you position it, if it hits you, let it hit you. If the market now turn around to want to go in the direction you already forecasted, you now look for another entry. So whatever you get that time can block your loss. And if it does not provide you valid entry again, do not enter. Do not enter. This, I'm telling you that I did not have opportunity of anybody telling me from the beginning. And that was why myself and some of my friends, we failed woefully from the beginning. But you are having opportunity now that I'm telling you at the beginning. And that means if you listen to the instruction, you will definitely succeed at a,
Amen.
At a much, much higher rate than we do.
Amen. Amen.
All right. So now, this evening, we have dealt essentially with risk management and trade management. I'm not interested in carrying you to the chart for now. Because what is the point? Carrying you to the chart, telling you support resistance, telling you market maker guideline and methodology of trading, and you are getting it and you are happy. And then we are so confident, and when you start trading, instead of you to use 0.01, you are using 0.3 lots. And before you know it, your $1,000 account is gone. You now say, hey, this guy say he has taught me Forex. He has taught me nothing. Because I'm still losing. I'm losing. You will lose because you are doing extraordinarily nothing good about trading.
Yeah.
So that is why I am not taking you to the chart first. I'm taking you to risk management and trade management strategy. That is what you should master. So that you don't make the mistake that some of us made in the past. And then another thing I would like to tell you to cap it all is that you should be bothered about your risk and not your reward.
Okay.
Your first consideration is about your risk and not about your reward. If you are trading and you are thinking of how much you are going to get first before how much you are going to lose, my brother, it's an antidote to failure. Now, I have $100 account to trade. I should be concerned and bothered by this trade I want to place. How much am I going to lose if I lose it? That should bother me more than how much am I going to benefit if I win it. How much, by the time you have the mentality of thinking of how much you are going to lose if you should lose the trade, if that one is more important for you than the money you are going to add to this one, you will succeed. Look at it this way. This Forex we are trading is more or less like you go and deposit $1,000 with your bank into your account, and your bank will be giving you maybe $4 in a month if it's up to that. $4 in next month, $4, another month, $4. In 3 months, they have.
So that $4 is for the whole year, not for 1 month.
I'm just saying. I'm just saying.
No, I'm trying to correct you. It's for the whole year. 1% for the whole year. Not per month.
Thank you. So let's assume they have 3 months, they have given you $12 from your 1,000. Have the mentality that as you are trading, you have deposited $1,000 with your broker. This $1,000.
Okay.
So your main interest now is that as the bank has helped you to first protect your capital and they are adding small, have the mentality to first protect your $1,000 with your broker and think of how you can now be adding small. So by taking trade, you should be thinking that if I lose anything, let me not lose more than maybe $10 from this money. And if I win any one, let me win up to $40. By the time you are doing it, you are having some win, some losses, some wins, some losses, and your wins are more than the percentage
Losses.
More than the percentage loss. Before you know it, in that this your account will now be like maybe something like 1,100. In 3 months, you have gained 10% of your account. This 10% of your account is it not better than $12, which is 12% that the bank has given you for 3 months?
Of course, it's better.
By the time you are now looking at efforts in this manner, you will discover that gradually, you will grow this account. This 1,000 account, you grow it, it become very big. But how many of us have the mentality of following this idea? We don't have the mentality of following this idea because
the reward is very tempting, though.
Yes, you want this $1,000 to become $2,000 in 1 week.
1 day.
And so because of that, you trade that you are supposed to use 0.1, you are using 1.0 lot because you want to get this $1,000. And if this hits you, you have just reached maybe 20% of your account per trade. And you only need 5 trades like that. To reach 20% per trade, you need 5 trades. You have risked all the 100% of your account. Account is blown forever. This I'm telling you, I did not have the opportunity of somebody telling me. They are always telling us how much reward we can get in Forex. They never told us how much we can be exposed to risk and have our money ruined in the process. But before you learn any technical analysis, you have to prepare your mind that the road to success in Forex is not by having bigger lots. You have to remember the scenario I painted for you about the water that is always dropping in my house. When you put bucket under, it will drop, boom, 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 and before they break, this bucket is full. I gain a lot from this scenario and I apply it to my FX trading. If you go on small lot, small risk, gradually, with a good strategy that have a good percentage win and good risk to reward, before 1 month, you will make reasonable money that no other business will be able to pay you. But if you have reward, you are thinking of reward before risk, that person will not last in the business. I still see some people, they have many positions. They say they are 1% of their account, and they have 5, 6, 7, 8, 9, 10 positions at the same time, and they say it's one risk they are placing on their account. They are deceiving themselves. Oh. Don't follow them. Oh. All right? Are you there? Are you there? Hello? Are you there? Oh no. So essentially, that's how you look at the whole story. That's how you look at it. And it's good that at the beginning you start looking at it. If you start looking at it this way, taking risk management and trade management very seriously, you will never blow account. You will never blow account. Some of us will have blown accounts severally. Blown account. We don't have regard to risk and trade management. Number one. Number two, we don't know the limit to which we should stop trading. When you have lost 1, 2, 3, 4, 5 trades in a row in a day, it's not enough for you to stop trading. If somebody has investment and he has lost 5% of his investment in a day, and he has opportunity to stop, why don't you stop? Stop further investment that day. Even if somebody is a gambler, you now go to gambling house. They call it what they call it in America.
Casino.
You go to casino. You play the first one, you lose 1%. You play the second one, you lose 1%. You play the third one, you lose 1%. You play the fourth one, you lose 1%. You play the fifth one, you lose 1%. That's 5% now. You have lost 1%. Is it not enough for you to and say this one is not for me today? But many of us in the past, even when we have the mentality of saying maybe the next one will win. Maybe the next one will win. And as it's losing, say maybe the next one will win. Maybe the next one will win. Maybe the next one will win. And you continue to lose. You continue to lose until in a day you lose 15% of the account and your eye will clear. So you must have an appropriate trading plan where you will write there clearly that if I lose 3% of my, let's say if I lose 5%, if I have lost 5% of my account in a day, I stop trading for that day. I have no business with trading again that day. I will wait till the second day. If you do it like that, even if you lose 5% of your account every day, you need to lose 20 days in a row for you to wipe your account. It's possible, even if the person is a mad person that is just pressing buy and sell.
It's not possible.
It's not possible. So with that in mind, you now discover that it's not possible to blow account again. If you have that mentality in mind, it's not possible. Do you understand now? So we are going to call it a day here. How free are you within the week?
I'm available, sir.
So any time within the week, I say, let's do Zoom, maybe 30 minutes, you are ready.
Yes, for now, I just embarked on my leave. I'll be embarking on leave.
Okay, you want
this 1 week now. This week I'm entering, I'm available.
Oh, this week you will still be available.
Yes.
Okay, but from the upper week you'll be going back to work.
Yes, but I will not be fully yet. At least this one or 2 weeks I'll be a little bit flexible.
Oh,
or even at that, for now we are still working from home.
No problem. Anytime we are free, maybe market is not moving the way we want and we are not trading, we can just go back to the chat and do 1 or 2 things. So just to facilitate your learning. All right. I really want you to.
Yeah. Let me ask you a question.
All right.
I noticed. So what it means is that in under risk management, I noticed that what it means that you don't take profits. You only just take stop loss. You don't take profit. So as the market is moving your direction, you're moving your stop loss. That's what you do.
Exactly, because the reason is that my father is not the owner of the market. So who me to determine where the market is going to hit? The only thing I can do is that the only thing I can have control of is the one that the market is moving now. I don't have control about where the market is going and how it's going to get there. So if I'm opportunity of getting good entry and it has moved in my favor, what I can do is to just move it to be following it, move it to be following it, move it. You can do that at time you get 300 pips, you get 400 pips.
Okay. No, I've seen cases whereby I put a take profit. The thing move. It will just near it, it's not turn. And it took my identity forever. It will not come back again.
For instance, let me tell you something. Let me tell you something. For instance, this market now, we know that this market is supposed to come over here to complete a structure. Supposed to come over here to complete a structure. It's by wave theory. You don't know that one. That I was telling you that we use it for forecasting. Supposed to come and then come down like this. This is how this market is supposed to be. If venture will resume on Monday or Sunday evening, and this market start to go up here, what if this market decide to now make something like this? Now move from here to here. And after moving from, and you have determined before that your TP is here, up here. If you now move from here to here, and you now come down, are you going to query the market? You are not going to query the market. So those that say their TP is here and they must wait until it's either they hit this TP or nothing, they will not get anything from the market. So as it's moving, you move here, I secure. He moved further, I say, thank God, I secure profit here. He moved further, I secure profit here. He moved further, I secure profit here. Now, instead of you to move further, you now break me here. I'll get out. But
okay,
secured. I already know that whatever the market does, I have secured big profit from here to here. That's the trick. That's the trick. In the olden days, you continue to say, my TP is so. Market will go make you profit and break you down to zero and even hit your stop loss. That is madness. Madness in the highest order. How can you win a trade by up to 30 pips and you are still talking of stop loss hit? Anybody that say that is supposed to be slapped. You are in profit, use 1.0 lot. You have maybe 10,000 or 20,000 account, use 1.0 lot. You are in 20 pips profit, which 20 pips profit is $200 US. And you are still telling me that you use that trade by $500. Is that person not a stupid person? When you move, when you get 20 pips in profit, why don't you move your stop loss to entry point so that even if you come down, I'll show you. Take you out and break it. Can you see the logic? When you take you up, secure 20. When you take you up to 80, secure 50. When you take you up to 100, secure 70. When you take you up to 150, secure 100. When you take you to 180, secure 150. When you take you to 200, secure 180. You take you to 250, secure 200. You take it to 400, secure 350. Just believing small gap to play, for the market to play. As it's pushing up, you'll be moving it. It's pushing up, you'll be moving it. This is the strategy. This is the trade management strategy that is close to perfection, that can make somebody succeed. We're not doing it like that before. I remember
taking loss.
Yes. I've traded before. I've traded before where I was seeing $8,000 US on top of my profit. And this at the end of the day, when I close the trade, you know how much I got from the trade? $1,000.
No.
$1,000. Because I was not moving my stop loss to book more profit. I was not booking more profit. That was why
okay.
failed. And it's not supposed to be so. So take note of this. Take note of this.
Okay.
Our next now.
So okay. From what you are saying now, the TradeView is a charting software. I should have that in addition to the broker's platform that I'm trading with.
Your broker platform that you are trading with should always be from your phone. Trade from the phone. Trade from you are trading from your phone.
Yes, I'm using my tab to trade. My tab.
Your what?
Tablet. I'm using my tablet. My tablet phone. Yes.
Your analysis should be on TradingView. And how do you open account with TradingView? Watch. Let me now show you. Go to tradingview.com.
Okay.
Can you see tradingview.com?
Yes.
Go to tradingview.com. Can you see? I already have an account called Nevasim. I have Nevasim here. Okay. So now, let me log out from Nevasim so that you see what I'm saying. So you can see what is giving you here. You see, start free trial.
Yeah.
Sign in. If you already have an account, that's when you sign in. But if you want to do free trial, you now type free trial here. You click free trial. All right. So you have all their plan, their payment plan.
Yeah.
You sign up for. Sign up for free. We don't trial. We want you to sign up for free. Plan for every level of ambition. You don't want this one.
Yeah.
Sign up. You see log in here. You see sign up here.
Yes, sir.
Sign up. Sign up.
Yeah.
Sign up. Why? Supposed to this is login. This is sign up.
Because you don't have account, that's why it's having difficulty.
No. Sign up. No, I know what they are saying. If you have Gmail, Abby.
Gmail, yes.
You now click this one. Google. Okay. Oh, it's taking me to the one I have before. Just do it on your device. Go and sign up.
Okay.
Sign up on
Okay, no problem. No problem. Just use your own that you have. Let me just see how you navigate around it. I'll sign up.
Yes. Sign up. You only need your email, your phone number, your this and that. Once you sign up, when you finish signing up, you now go and confirm your email. Go and confirm your.
Yes.
Once you confirm your email, that's all. That's all you need to
Okay.
confirm your email, and you are done. That's all. And
So
you just hold on so that any analysis you do like this on your account, if you come back the next day, you meet it there. No wipe.
okay.
Let's go to Euro USD. Euro USD. See the analysis I did on Euro USD before. Are you not still seeing them there?
Yeah, it's still there.
So it's my account. Let's go to GBP JPY. GBP JPY. Any analysis you see, can you see it? You will still see it there.
Yeah.
Any analysis.
So this chart now, this chart, this candle travel chart is current transaction.
This one that is moving here.
Is the current movement?
Yes, that's it now. That's it.
Okay.
You mean this one that is here? This can.
Yes. It's a live movement of that pair.
Yes, but the market has closed.
I know.
So
I know.
That is the movement. If market has not closed now, you see it will be moving here, just like your MT4.
Moving, okay.
But why we are doing this one is that it's easy for us to draw on this one.
Move your cursor around there.
Yes.
Okay, now I understand. MT4, I cannot move my cursor. Now I understand the issue.
Do you see as moving? Okay.
Yes.
Do you see here? It's easy.
Yes.
It's easier. Can you see? You can manipulate it. You see? You can draw. Look at your rectangle. See, you can draw. Can you see? You want to change this?
Yeah.
Just go here. Very easy. Change it. Very easy. Can you see? Color has changed. Very easy.
Yes.
Check your Fibonacci. Look at it. Look at it here. Fibonacci retracement from here to here, from top to down. Can you see this market retrace at Fibonacci retracement? Pulls down. It's easy. You want to check your profit. You click this one. From profit from here to here, 307 pips. Very easy. Look at it. You want to draw anything, you want to do this arrow here. Can you see? Very easy. You want to adjust this arrow, change it here to black. Can you see? It's very easy. You want to draw trend line. Look at it, trend line here. Can you see? You want to change the color of this trend line. Go here, change the color to black. Simple. You want to increase the thickness of this arrow. Come here, increase the thickness. Can you see? Easy.
Yeah.
Easy. That's how you do it. I want to clean up all this markup that is here now. I'll go to delete here. Delete markup. Can you see? It's gone.
Yeah.
Gone. All my indicator now, I want it to come up here. I'll click this one. Can you see? It's back. Moving averages are back. I want you to go and hide. I click here. It's hidden. Can you see? It's so simple. So simple. So that's how you go about it. So we want to call it
okay.
Want to call it
Thank you very much. Thank you very much. God bless you.
Another question.
How do I have to ask? But for what you have said, we are coming from trade management and risk management. I wanted to ask how to understand, but no problem. Let me say you take as one. I want to ask, well, my challenge is most times you just put the trade, next thing, it is moving against you immediately. You see that this thing is trending. Next thing it has moved against you. You just start like, I don't know way to understand this thing. I don't know way to understand.
You will understand. As we go into technical analysis and begin to break that, you will get to understand all these things. You understand?
Okay.
I'm going to, this recording, I'm going to post it in the group to assist some people who are struggling. Do you permit me to do that?
Okay, no problem.
Okay, thank you very much. All right, have a lovely weekend. Great.
Okay, thanks.
Bye. Bye.
Bye.
Yeah.